Well, the shaky start to the week on Wall Street may be good news for prospective home buyers. It could force the Fed to move faster toward a rate cut, bringing down mortgage rates in the process.
But buyers might want to wait until after the election to make a move. According to one study, home prices and the number of homes sold normally increase the year after a presidential election.
Joining us now to help break it all down, Nest Seekers International Chief Economist Erin Sykes. Erin, thanks for being with us. So again, we're seeing rates come down a little bit. We believe the Fed's going to cut rates, but home prices are still really high. So where do we go? Are we going to have more opportunity for home buyers who want that first home and to live the American dream?
Yeah, so I think this is a sneak preview as to what is going to come towards the end of the year, because yes, we've seen the 30-year move down without the Fed touching the Fed funds rate, which is a great sign. Now, if we do get the cut in September, it will probably end up around 6.25 by the end of the year. That said, earlier this week, we were calling perhaps for an emergency cut. I don't see that on the table since we did rally back today. However, the real caveat is what comes first, the chicken or the egg? Is it more about the home price or is it more about your mortgage rate? And right now, inventory is starting to sit. Things are there for 180 plus days. And I'm lucky in that I work in the Florida market as well as the New York City market. And in Florida, particularly in Palm Beach, we have been running 6 months almost to the day tracking ahead of New York City. And we pulled back 6 to 9 months ago. Our inventory is over 180 days on market. We have 36% more inventory on this year versus last year. So I expect that to follow suit in the rest of the country as well.
So there is more inventory, but are you starting to see, and it's sitting on market longer, but are prices coming down? Because that's the adjustment that you need to see. Because mortgage rates, the inventory problem is related to people who have mortgages that are like 3.5% and they're not selling. But you have mortgage rates that are still expensive and home prices that are way too high, and affordability is the worst it's ever been. Are people cutting their asking prices to move their homes? Because ultimately you need to have that equilibrium.
Exactly. And so we're not necessarily seeing huge price cuts. We're starting to see people tiptoe into the price cuts. However, what is actually going into contract is going into contract 10 to 20% below ask. So you have to be aggressive as a buyer. Don't pay attention to the list price. Really go in, make your own deal, state a case for that deal, exactly what you just said. And you can find this happy medium of a falling interest rate environment plus a falling price environment, but it's going to be a blip in the radar, so it's not going to last very long.
So you got to time it right.
Exactly.
Erin Sykes, great to see you. Thanks for being with us.
Thank you.